Okay, I just want to take 2 minutes of your time to show you the benefits of becoming a member of the Green Star Trading Patreon, all the various things you can unlock. So here we are on the Patreon page as you would see it as a prospective customer. So let's just scroll down before we discuss the tiers and have a look at what I've done recently. So if you were to become a patron today, you could potentially unlock 150 exclusive posts, and most of them are going to be video content. For example, I recently did a video for my patrons on bond ETFs. Is it time to buy? Interesting subject. Had a lot of interest from this on the Discord. We've got the most recent live stream from last week. This went on for 4.5 hours and is timestamped on YouTube. We discussed a whole bunch of assets, and the great thing about the live streams is if you request a certain asset in advance, I will find time to look at it. Okay, now I don't care what it is, it could be anything of your choice. I'll try and find time to look at it. We've got a recent Bitcoin video that wasn't available on YouTube as well, where I wanted to go over a few future ideas. Another live stream for you to look at. Another video here, for example, of what I look at in a company. This is going over the financials of companies and how I basically want to assess the health and the value of a company and a stock and the kind of things I look for. And then we've got another live stream here. Then we've got our SCS trades and portfolio monitor. This is a little Excel spreadsheet to help you manage your trading. We've got a few of those as well for you to download, and an explanation of how to use them. We've got a video here on the TLT and the 20-year ETF. None of this, of course, has been available on YouTube. So if you want to become a member today, you'll get access to all that stuff, plus all the educational videos, but it depends on which tier you join. So let's just very briefly run through those. Tier 1, for £5 a month, you will get a exclusive video each week that is not available on YouTube. Tier 2, you get that same video, but you also get access to the public Discord where you can interact with hundreds of members, ask me anything you want. There's an Ask Tom channel there where you can talk to me directly. That's also where you can make requests for the live streams. You can share ideas with one another and access all the educational content in a nice, easy, playlisted manner as links to YouTube. And then tier 3 is everything in tier 2, everything in tier 1, plus a monthly dividend calendar and stock rating system, and a monthly video for those members to break down the companies I'm most attracted to in those stocks that month. So those are the benefits you can get for joining up today. Please consider it, but I would beg you to leave it to the start of the first day of a new month, because Patreon does not charge pro rata. It will charge you twice. If you sign up on the last day of the month, you'll get charged on the first day of the next month. So please feel free to sign up. We're looking forward to having you on board, but just leave it to the 1st of October in this case, and the 1st of each month if you're watching this advert in the future. Alright guys, thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for an update for Bitcoin. It's been a few weeks, I know, on YouTube. I've been very busy lately covering other things for the Patreon. For example, did a video on the UK financial crisis the other day, and the live stream was about leading indicators and macroeconomics and stuff. So only got the one video out last week on YouTube, which was Amazon, and I know it's been a while on Bitcoin. But the thing is, we've been discussing Bitcoin on the weekly live streams, and I've been giving my best appraisal of the situation. And to be absolutely frank, my best appraisal of the recent situation is that this is a bunch of sideways SH1T, and it's incredibly difficult to interpret. Now I do have a short-term count which we'll come in and have a look at of how we can interpret this, okay, and we'll go over that. But my confidence in it at the moment overall is pretty low. So we're going to start on the longer time frame first, where I still feel the overall picture makes a great deal of sense. So that's where we're going to start, and we can see here the same count we've been looking at for a while, where we've got a WXY heading lower, with the most likely support area coming between the golden ratio in log at the 61.8% at 10.23578. Spot 78, and between the 50 at 14.732 spot 98. So we've got this area in here between 10 grand and 14 grand, and I think more likely 10 and 12, because we come into all this prior demand, which we can see here. We've got strong support from previous highs, previous lows, previous highs, previous highs, previous highs becoming previous lows, resistance becoming support, and you know, we've got this point of control in our volume profile for our fixed range based off of the impulse to the high here. So we've got all this volume in here, all this support in here, all this demand in here, and major fib levels in here as well. So somewhere between 10 and 12 is where I think we're going to bottom. Okay, maybe a little lower if we have to come further into this support, but that's roughly where I'm looking at in the long term, assuming that we break these lows and don't suddenly zip out of here in a big strong impulse that none of us are expecting. Okay, so that's the longer term picture. So that's still where I'm thinking we're going to go. I don't think there's much more to discuss about that in the meantime. I do see some bullish pressure building up. We don't have divergence because we haven't made a low below the June low, but I do see a series of higher lows in the RSI. Low, higher low, higher low. Even as prices drifted lower recently, we've had these higher lows in the RSI, but we've also, you could argue, had a series of lower highs in the RSI as well. So we've got this contracting pattern going on, but there's definitely bullish pressure underneath for the moment. It feels like there's some bullish pressure and it wants to pop a little higher. How we're going to interpret that, we'll come in and have a look at it in a little while. Now we've got same on the MACD. We've got these higher lows on the MACD, and the OBV has ceased its breakdown in terms of the cumulative negative volume, has slacked off, and we've actually had confirmation of a higher low since breaking that trend. So we've got a slightly higher low here. Now that confirms price action. It's not divergence again, as we haven't made a lower low. If we made a lower low in price and a higher low on the OBV, the MACD and the RSI, that would be bullish divergence. So we can't call divergence, but we can look at it as though there's some significant bullish pressure building up here at this level. Now we are still in this demand zone from this buying action here, back between the previous all-time high support and the pivotal high here as well below it, which sandwiches this demand zone. A little bit of volume in here, but generally not really much here to go on, not in comparison to what's below us, but it's still holding for the moment. We can see that we're sandwiched below the 60 exponential moving average, with highs being tested frequently. Here to the tick, just above, back down, back up, resistance, back down, back up, resistance. So we're stuck below the 60 exponential moving average. We appear to have some bullish momentum building underneath us. So if we do pop, a pop above the 60 and a run on the 250 would make sense here. From the perspective of making sense of those indicators, it doesn't necessarily make sense from an anyway point of view, but very little does here at the moment. So just keeping our eyes open for that and our open mind about what could happen. We do have some alternates to consider though, so let's just switch off the primary and all these extra bits and bobs and consider those alternate counts. Now the oldest one we have, going back to when we first discussed it back in September 21, is the idea that this was going to turn into a flat pattern. Okay, so we had a wave 1, wave 2, this is wave 3, all of this is still wave 4, and then off to wave 5. And we've got 5 waves like this. Now this gets invalidated at 13,831.41 as wave 4 cannot retrace back into the price territory of wave 1. So far we're seeing this as a 3-wave flat into A, B, C, zigzag into B, and then a 1, 2, 3, 4 could be in, okay, or it could be 3 into 4, we don't quite know, and then finally a 5th wave down that has to come in prior to this level. Okay, so we can't go much lower than the June low, right? We have to get in before 13,831.41. And there's still room. This is in log we're looking at the moment. When we look at this fall in linear down to 13,831, it's a significant drop from where we are, around 20 grand at the moment still. So there is room to get that 5th wave in here, but the deeper this 4th wave gets, the less likely it's correct. And we've come back an awful long way. So we might end up invalidating this count. But for the moment, it's still alive. Then we've got an alternate count where we looked at the combination idea, where we had flat for W and a zigzag for the 4. This assumes that we're done and that this is a 1 and this is somehow a 2 and we're about to go kaboom, flying up in a 3. I'm not saying it's impossible, but trying to get a bullish interpretation on this is a bit of a pigging nightmare at the moment, and we'll see what we can do basically when we come in and have a look at the smaller time frame, which I think we should probably come over and do now, as I don't want to waste time going over the same ground over and over again. We looked at that 260 that 60 exponential moving average at 250. There's one other piece of geometry I want to consider as well inside of that flat pattern. If I just show you this pitchfork off of that pivot, let's just bear with me while I try and hide this. Okay, so if we come off of log and look at this in linear at the moment and observe this pitchfork, let's bring in a 23.6 as well. Bear with me one moment. Okay, so we've been moving between multiple levels here. We've got the 61.8 here, 61.8 here, and the 50, 61.8 and the 50, 23.6, 23.6 and 38.2. Median line roughly 50, 23.6, 61.8, 38.2, 78.6. Back to the golden ratio, down to the 23.6. You can see what I'm saying here, right? Pitchfork's still in play and we're bouncing between these levels. Okay, we've been doing that the whole time. And you could draw several pitchforks where you're getting this kind of interaction in log and in linear. So before you say, oh well, what if it's this one, what is that? It could be any of them, and it could be all of them, right? Thousands of algorithms trading off of thousands of different things. So yes, it could be all of them in different ways. Now we're currently back at a 61.8% retracement here, which we've touched and continue to trend down while getting compressed below the 60 exponential moving average. So if all of this seeming bullish pressure building up is about to pop, then a rush out of here back to at least the probably test the outer bound of the pitchfork from here, I think could happen. And then we could head lower from there after completing a three-wave correction, or perhaps we're bullish. I know there's a lot of if, or, and buts, but this is how markets get after massive sell-offs. Bottoms don't come very, very cleanly all the time. They can they can be quite convoluted. So either way, enough of that now. So let's come in and have a talk about what I think might be going on the smaller time frame here. So let's just zoom out enough here to get a grasp, and let's get rid of all this small time frame count. So coming down in that double zigzag in the primary count, expecting 5 waves to come down. Okay, like so, perhaps not this deep, but into all of that prior territory, that prior support that we were looking at. Okay, if we come off of log, we can see how that price collapse. Let's just zoom in. We're around 20,000 at the moment, and we're talking about coming down all the way into anywhere between 9 and 12,000. Right, so we could come down in 5 waves in here. Now how we interpret this is the tricky part. So let's just come in to the smaller time frame. We're going to come down to the hourly here, and I'll talk you through the best I can make of it so far, and it's literally the best I can make of it. So, and I like I said earlier, I don't have much confidence this is right, but we'll go through the various options. W, X, Y, B. This is A down in 5, and we've got 5 to come in C, and this is WXY into B. From there we get 1, 2, 3, 4 and 5, with 1, 2, 3, 4 and 5 inside of it, subdividing for the 3. We get a zigzag which looks like an impulse, but it can't be an impulse as we go lower. Okay, so that's incorrect. This has to be a zigzag, and then from there we get another zigzag, and then we go W, X and Y for B. So we've gone A, B, and now we'll go 1, 2, 3, 4, 5 in C, and we'll go up in a bullish move here to get the 2. I'm not sure the 3 will look like that. I'm just, whatever, I've just placed it randomly. But we cannot come back beyond 25208.75. If we do, it's either a larger WXY 3-wave correction, or it's 1 into 2 and we're off into 3 and it's bullish. So I hope that hasn't completely confused you. So here's the minor wave degree B. We're now into minor wave C, and we've got minute 1 complete, A, B, C, flat into minute 2, down into minute 3, 4 and 5 to get minus C. okay, which will be down there in that 9 to 12 grand range. Okay, that's basically the count. All of this here, the best I've been able to do with it, if I just come into a even smaller time frame and try and talk you through it, right, because I've had to be quite imaginative. This bit here, that looks like 5. This can be counted as a flat, and this looks like a diagonal. Okay, into there. So I've gone A, B expanded flat, and then I've gone diagonal to here. I know. 1, 2, 3, 4, 5 into C. A, B, C is actually a zigzag. It looks nothing like a zigzag, but it's a zigzag. And then we've gone A, B, C into Y here to get the B, and then this we've finally got something resembling an impulse. 1 into 2. Now if that's the case, I mean, it could still be deeper. It could be A, B, C into 2 before this low, and then 3, 4 and 5 to get C into 2, and then off we go down into 3. Okay, so I hope that makes sense, but that's about as good as I can make that count look at the moment with the B wave finishing here. So can we wing a bullish count into here? Right. If the bearish count is as ugly as it is, and the bullish count is as ugly as it is, should we be so picky about which one we're backing, really, at the end of the day? I personally believe trading short-term volatility, if you want to trade this at all, is what you should be doing rather than focusing on the long term. It's too messy, and for me, to be absolutely honest, with volatility picking up in more obvious ways in other markets, they're much more appealing for short-term trades than this is. At the moment, this is a mess. But let's just stop for a moment and think about, is there a way we can interpret this bullishly? Okay, I'm already telling you now that this to here can't be right, so we'd have to move the 2 to here. Right, in order, because none of this is an impulse. There's just no fucking way that's an impulse or a motive wave. Sorry to swear, but there's just no way it is. Right. Okay, I can get a zigzag in there using maximum imagination, as I've already showed, but there's just no other way that that's motive. So, A, B, C, 1, 2, A, B, C, 3, 4 and 5 into 1. So, problems, I've discussed them multiple times. The problems we've got here. The structure into the wave 3 has to either subdivide like this as a zigzag, 5, 3, 5, where we break the trend line. Okay, A, B, C breaks the trend line of where the wave 4 finishes, which is something that should not happen in a contracting diagonal, and we get an A, B, C completion where the C fails to go beyond the A unless we count it as an expanded triangle within the B. Okay, and then we can get the C to finish at the A. It still breaks the trend line, it still does not subdivide neatly. Okay, and we've got elements of the count. For example, this, which look impulsive, we have to count this as a zigzag. And then this is disproportionately bigger than everything that follows. I've already gone over so many times why it's such an awful looking leading diagonal, but it's the best we've got. It's the only bullish count we've got. Alright, so if we're going to consider it, and I think given the convoluted nature of the overall count, why not? Alright, why not consider it? If bottoms can be that complicated, then who knows how we get out of here. Maybe that's it. Right, so from here now we need to get down and make this we're going to have to rearrange this now, so you have to bear with me, but the 2's got to be over here because I can't get this to be a motive move off of the low. This low here on the 13th of October has proven to be a lower low on several exchanges, including the BLX liquid index. It is not here on Bitstamp, but I can live with it not being here because if it is on others I can accept it, so that's what I'm going to have to do. So we can look at this as A, B, C, A, B, C, 5 into a flat of a C, which goes to the 423.6% the extension of A, so don't even start with me. I know that's an absolutely fucking ridiculous flat pattern. But how else are you going to count it? You can count it as that zigzag if you want. Doesn't really look like a zigzag. Either way, you then have to get down to here, back up to here, and then somehow down to here as either a motive wave, which it clearly isn't, okay, or it's part of three wave swings as a WXY. So best of luck to you. So I'm going to just have to live with that for the moment. Now from here, how can we get down? Well, we could go... What could we do? What could we do? Not much, to be absolutely frank with you. Gotta get this to be some kind of free wave structure to here. We can say zigzag to there. Then we can use my dodgy zigzag that I came up with to get to here. Then one more zigzag to here. So the best bet you've got, I think, is to say W. Then that motive A, B expanded flat, diagonal, X for the ABC, and then Y to here. And that gives us the 2, which comes in as a part of a larger WXY pattern. So how do we want to express it? Do we want to say A, B, C, W, X, and then this is a smaller wave degree, sub-minuet, into minuet, Y, into minute 2. I think that's it. I think that's the best thing we can do here. How I want to count that, that's tricky, isn't it? Got to get the swing to here somehow. So I think that's a WXY as well. And you know what you're going to do. And when it's this screwed up, what you're going to do. And then from here, A expanded flat, B diagonal, C. Stealing from our primary count because it's the only explanation I have for this pile of shit. And then A, B, and C to here to get the Y, and then we're done. Yay! 1, maybe A, B, C into 2, maybe 2. Either way, we are off to the moon at this point. We'll get a big 1 inside of the 3. We'll get another deep 2, just to keep the price action going sideways for a while. But then we will finally break out into 3, 4, and 5. Of a larger 1 into a deeper 2, so on and so fucking forth, all the way up into a gigantic wave 3, which is going to be a bull market for the ages. There's your bullish count. Alright, you tell me if that's any more viable than the bearish count, and I'll find you a reason why the bearish count is more viable, and vice versa. They're just ugly. Now the primary count, longer term, calls for a lower low. I think that's still where I'm leaning, but I'm not going to write this off if this breaks out. Anything's possible at this point. With the low, if this is the low from June, and it's this messy and this convoluted, you got to find some kind of interpretation for it if it breaks out, haven't you? Can't just ignore it. So on that basis, let's gather this up, pull it into the bullish folder, and now consider one final alternative explanation for going lower. Okay, so here we're just going to work from scratch now, because on the longer term count, if we come back to the BLX, I discussed the possibility of the primary, the B not being in, and the B being over here. And the bullish build up beneath this move is because we're going to get a wave B of the A, B, C. We're going to get an A, B, C inside of it, probably a flat pattern of some sort. And then we're going to break out in 5 to the upside before rolling over. So if we're going to do that, we need some kind of explanation on the shorter time frame to make sense of it. So what the hell is that going to be? Well, if this is free and this is free, and I would argue that the best luck overall is that it is free and free. I know it's fucking messy, but I think that's free and that's free is the best bet. So this will break out as 5 if that's a flat pattern. It could be a zigzag with an extremely deep B and convoluted B, because we do have the idea of a diagonal, right? So that could be A, 5. All of this could be 3, B, and then 5 again, C. But with such a deep retracement, one would probably lean into it being a flat pattern instead. So first thing we've got to do is we've got to check that it is deep enough. Let's come straight to there and go to wave B flat pan. We've got 1, 2, 3 lows that all retrace more than 90%, 89 in my case I say here, but 90%. So yes, it's deep enough to be a flat, so perhaps I think we should look at it as a regular flat. So 1-to-1 ratio in the flat, if we're using regular flat, is more likely than a significant extension in the C, although an extended C can still occur, but an extended C is far more likely in an expanded pattern where B goes to a new price extreme, and it's not the case here. So let's just label it A, B, C to here. And then inside of this we want 3. Well, I think that's possible because I think we can go A, bum, 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 and 5 down for a flat here for B. So 3 into here, 3 into here, 5 into here for the B. And then from there we can swing the diagonal for the C. Okay, now I know you're like, oh, you don't like the diagonal, Tom. I prefer it when it's a diagonal from here as opposed to a diagonal from back here. Alright, so I'm still, it ain't perfect, I still don't like it, but it's better from here at least. So there you go, you can get your C into your A. This is going to be a WXY. Right, so we can say that crazy flat to here, and then that convoluted pile of shit we came up with earlier to get to there. And then that gives us a move out of here. 1, 2, 3, 4, 5 to here. So what's the target we're talking about? Somewhere around 25. So 25, 7, 1, 8, 9, 4. I make it. That'll do. And that's going to be a flat pattern. Now, it does kind of fit. I mean, the count's atrocious, but they all are. So you got bullish divergence, not divergence, sorry, bullish pressure building up. You want to pop higher. I think it's evident that you want to pop higher. You've had an impulse off of the low. So some kind of pop higher, and this is going to confuse the most number of people because we've had a low, a higher low, we've had a high, and then a higher high. So we've got a high, higher low, higher high. That's going to get a lot of people very, very bullish, you know. But it will actually be the completion before rolling over in 5 waves. So there's your best guess at how we get the B wave, the larger B wave, to finish over here. Alright, so I'm going to call that alternate flat B wave in Y. There you go. Alright then, so that's the best I've got for you guys. Now I know, like I said, it's been a while since I covered Bitcoin, but where are we? Where have we been? Since to the June low, we've come as far as 2.72% to that low, and then 3.4% to this low. In other words, from low to low, we've done nothing for months. Okay, yeah, we've had this swing high and then swing back, but it didn't make anything clearer. So my philosophy in trading is when things get this messy, I'm not interested. I'd rather go and find something which is screaming at me to trade it than to try and touch something which is a mess. This will clear up in time, and don't worry. I think if you are a bull and you want to be in long term, I am, and I've been in for years, and I'm looking to continue to accumulate. The way I see it is, if our longer term count is correct, you are not going to worry about missing 5 grand, 10 grand, or even 20 grand, believe me, by the long term. So be patient with your entry if you're looking at that. In the meantime, trading this short term volatility, looking for what the price action is doing on the much smaller time frames, trading momentum is probably your best bet. But in my opinion, there's got to be something easier. There's got to be something easier out there than this at the moment. So, but that's just my opinion. You can do whatever the hell you like. Either way, to sum up, come back to the BLX. We now have a solution for a B wave swing to here before coming lower. That's one of our counts. We have the idea that this was the B, and this is 1, and 2 is going to come in prior to it. and then 3, 4 and 5 down into here, maybe a bit deeper down into here. And then there's the idea that this is 1, all of this is 2, and we're off and running in a 3. So if we move from this pivot from here and we take out a wave 3 target, which would bring us back above these prior lows and all of this trading here to the 32,555 level. If we get a move like that, we have to seriously consider that being 1 and that being 2. Okay, but we are a long way from that happening yet. Okay guys, there you go. Thank you very much for joining me on this technical analysis of Bitcoin. I hope it gets clearer, and I hope things clear up and we can do a video in the next week or so which just gives us a little bit a better direction. But I've got a feeling things are going to remain convoluted for a little while yet. But if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, an enormous thank you to all of my Patreon subscribers. I could not do all of this without your support and provide the extra content for you guys without that help. So you are greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers on the Patreon page, and feel free to sign up. Once we get beyond the middle of the month now, as we are, perhaps consider waiting to the start of next month. Alright guys, take care of yourselves, and I'll be back with you as soon as possible. All the best. Bye bye.